Thank you, and hello, distinguished guests, ladies and gentlemen. We're here today with a very, very distinguished panel to look at how CEOs here see industry and business in the AEC. So first, I'll just run very briefly through our panelists and introduce them. To my far right, at the end is Mr. Kyoichi Tanada, who is president of Toyota Motor Thailand, one of the biggest companies in Thailand, who has held many roles in Toyota over the years. First came to Thailand 30 years ago, but has gone through the whole organisation since then, is an expert on this region, having majored in Indo-Chinese studies at the Tokyo University of Foreign Studies, speaks and reads Thai, which is very unusual, and has just told us that from tomorrow he will have a much bigger role and be heading a whole much bigger region, including the Middle East and 10 countries of Asia. So that's from tomorrow, and today he is president of Toyota Motor Thailand. Next to him is Darren Buckley, who is country head of Citibank Thailand and is also president of AmCham Thailand and a former city country head in Japan. Long-time city executive, having joined in '92. He's also the very first British person to head AmCham, so he speaks for many constituencies. And then next to him is Stephen Jaggs, managing partner, Allen & Overy, Thailand. Allen & Overy, one of the leading firms in the region on a variety of mainly business areas of business, and has advised banks and companies throughout the Asian region for years, especially on finance of infrastructure and power projects in the Greater Mekong sub-region. And last but very not least is Serge Pan, immediately to my right. He's Executive Chairman of Yoma Strategic Holdings, the only Myanmar-based company which is listed at the moment on the Singapore Stock Exchange, and hopefully will be listed by the end of the year on the new Myanmar Stock Exchange. And Serge has developed a broad group encompassing financial services, a bank, Yoma Bank in Myanmar, property development and aviation, as well as healthcare, and is steering one of the signature preservation projects of a massive old building in downtown Yangon. Anyway, it's a very diverse and interesting panel. So I'd first of all like to, since we are looking at the CEO's view of AEC and ASEAN as a whole, I'd like to turn over to each of our panellists to tell us a little bit about their business and its positioning in the region. So first up, Tanada-san has a presentation that he'll give us, which will run to about 10 to 12 minutes, and each of the other panelists will run through things. Then we'll have some specific questions, and we'd very much like some interaction with the room, so please think about some questions. We'll leave quite a bit of time at the end for some questions to be asked and hopefully some dialogue. So Tanada-san, please. Thank you.
Sawadee Kap. So, good afternoon, everybody. My name is Kyoichi Tanada, and I am the president of Toyota Motor Thailand. I am delighted to have this opportunity today to give a short presentation. I have divided my talk into three parts: the Asian automobile market, the history of Toyota in Thailand, and the potential and strategy in the region. Let me start with the Asian automobile markets. The Asian market has continued growing since the currency crisis in 1997. However, in three countries, India, Indonesia, and Thailand, the growth has been dramatic. Take a look at this graph. It shows sales in the Thai automotive market. Since the early 2000s, the general trend has been one of gradual increase, reaching 800,000 units in 2010. In 2012 and 2013, the numbers were boosted due to the back orders arising from the floods in 2011 and the fast-car buyer policy, reaching more than 1.4 million units. In 2014, the market has sharply dropped mainly due to domestic factors, the political situation, the drop in the price of agricultural products, and increased household debt. However, this was still the third best year. Last year, Toyota's overall share of the market was 37%. Let's look at automobile production volume in Thailand. Look closer at 2013 and you can see that the total production volume was close to 2.5 million units, which was the highest ever. In 2014, this dropped to 1.9 million due to domestic demand decrease. However, Thailand still has the highest production volume in ASEAN. 40% of all vehicles manufactured in Thailand came from Toyota. Next, let me show you the export record for automobiles and related parts. In 2014, the export units reached 1.1 million units. Exports announced to 781 billion baht, which broke the previous year's record high. Clearly, the automobile industry is a key industry contributing to the Thai economy. Many countries in the world are export destinations from Thailand. We can truly say that Thailand is one of the biggest export hubs in the world. Let me now move on to the history of Toyota Motor Thailand. The history of the Thai automobile industry can be broken down into 5 main stages. In the 1960s, the Thai government began to attract foreign investors with privileges such as tax exemption. In the 1970s, after the government obtained investment in Thailand, the government increased the import tax drastically, aiming to protect and foster the domestic industries. The purpose of this policy was to also increase the assembly plants in Thailand. Then, in the 1980s, the Thai government focused on supporting the parts supplier industry, and so more and more Japanese parts suppliers came to Thailand. The 1990s saw the adoption of the open market policy in the ASEAN region. Seizing upon this opportunity, the Thai government promoted exports. Since 2000, Thailand has come to be widely known as the Detroit of Asia. Manufacturers in Thailand have made it the center of exports, and they continue to do so. Let me go more into the history of Toyota Motor Thailand. Since its establishment in 1962, Toyota Motor Thailand has grown alongside Thai government policy and the Thai automobile industry. We have established 3 assembly plants and 1 engine plant since commencing operations here. Our main products are the pickup truck, Vigo, and Eco Car Yaris. Both are exported worldwide. 3 years ago, we are very pleased to celebrate our 50-year anniversary. Now let me outline our affiliated companies in Thailand. TMT, Toyota Motor Thailand, employs nearly 17,000 individuals, including those in factories and marketing. TMAP EM, Toyota Motor Asia Pacific Engineering and Manufacturing, acts as the headquarters of engineering and manufacturing in the Asian Pacific region. STM Siam Toyota Motor Manufacturing is the plant for engine production and exports. As you may know, it is said that more than 20,000 to 30,000 parts are required to produce one single vehicle. That means so many parts suppliers are required to produce one vehicle. We can say this is a typical feature of the automobile industry. Here in Thailand, nearly 2,400 companies are related to the automobile industry, employing around 540,000 employees. One strong point of the Thai automobile industry is its vast and stable structure. This is something other Asian countries cannot simply follow and copy. Finally, that brings me to the future potential of the AEC and the Mekong area and Toyota's future strategy. There are two factors with the potential to enhance the automobile industry within the AEC. The first is economic expansion. For example, buying power in the provinces, especially at border areas, will increase. This will therefore increase auto market demand in these areas. The second is in infrastructure, logistics, and customs process enhancement. This will improve vehicle logistics cost and lead time. It will also further benefit Thailand as a production hub and create various and collaborative parts and vehicle supply operations within the Asian region. So, as for the potential of the Mekong area, there are three key factors. First, the large population with a low rate of car ownership. Now, the population of the Mekong region, which includes Thailand, Vietnam, Myanmar, Cambodia, and Laos, is 230 million. This is equivalent to Indonesia. Compared to Thailand, the GDPs of other Mekong countries are still low, and car ownership is limited. We do expect future market growth once economic expansion translates to increases in people's salaries in this region. Let's turn our attention to Vietnam. The import duty for ASEAN produced cars will be 0% in 2018. That's down from the current 50%. The change to the market will be huge. More people will be able to afford a car at a reduced price, and so that auto market will, without question, grow. That brings me to the last factor. The Mekong is ready to be connected by land and function as one economic zone with Bangkok at the very center. The AEC aims countries to have a single window, which means simplifying customs procedures at borders. Travel between Bangkok and Hanoi will be shortened to just 2 to 3 days from the current 5 to 15 days. The effect will clearly be one of enhanced inter-trade transactions within the Mekong area, while also changing logistics and procurement strategy. We at Toyota aim to consolidate Thailand's position as a business operational hub. With this in mind, we have established a new organization, which is called the Mekong Virtual Company within Toyota Motor Thailand. Its aim is to share and utilize our practical business know-how in sales and after-service to quickly establish and strengthen the business operations for each country in the region. In addition to this, we'll enhance product lineup and seek regulation unification by cooperating with each government. So, let me summarize what I have said today. First, Thailand has played a long-standing role as an important export center in the automobile industry. Second, we believe that AEC will increase opportunities for the auto industry in terms of the market and supply chain in the region. Third, we aim to position Thailand not only as a production and R&D hub, but also as a business knowledge hub in the Mekong area to be ready for future market expansion. I believe that in the near future, borderless business expansion will take place in the Mekong and ASEAN regions through the AEC, and we at Toyota hope we can all grow together in this new era of opportunity. Thank you very much.
Thank you very much, Tanada-san. I'll turn over to Darren to tell us about Citigroup in Thailand and the region.
Thanks, Gwen.
ASEAN.
Citi, as you know, has been around for over 200 years and has been in Asia since 1902. We operate across 17 countries in Asia Pacific, and in 8 of those countries we have revenues in excess of $1 billion in those markets. It's a very balanced business and an important part of our overall Citigroup revenues and income. If you take 2014, the net income from Asia Pacific alone was 36% of Citigroup's global net income, and it is ever increasing. Within ASEAN, we operate, again, since 1902 in 7 of the 10 ASEAN markets. We cover those where we have no presence, which are Myanmar, Laos, and Cambodia out of Thailand. ASEAN, too, is a very significant part of the overall Asian business. We serve around 4 million clients in the Asian region. We have around 37,000 employees, or about 30% of Asia Pacific's total workforce here in ASEAN. And we provide a full range, very balanced, of services through our institutional and our consumer businesses. If you look beyond just the business that is done in the ASEAN markets, we also have a number of hubs here in ASEAN. So, for example, in Singapore, we have a technology hub that supports over 60-odd countries for Citigroup around the world. In Malaysia, we have a trade processing hub. We also have an anti-money laundering monitoring hub. In the Philippines, for example, we have a financial reporting hub. And we continue to look to use ASEAN in many different ways to support not just our ASEAN businesses, but also our global business around the world. I think I'll stop there on Citi and pass it along.
Thank you, Darren. Stephen, please tell us about Alan and Overy, your operations in the region. I think you've got a couple of slides there. They loaded up. Jake, are they loaded in? Sorry, just one moment. Well, we might continue with. We could possibly. Is it in the machine? Apologies. Oh, okay. Sorry. There we go. Thank you.
Sorry, thanks. I'm used to having my sort of IT guy around to do things for me.
You just got one.
Yeah, I've got a new one. So that's great. Just a few words about sort of ANO and ASEAN. ANO's sort of been in Asia for around 25 years. The reason I put this up is not to kind of promote our firm, although obviously that's always good, but just to sort of show what our footprint is like in ASEAN, because our sort of approach and strategy for ASEAN is a bit different to many other sort of law firms and other sort of service companies. For those of you who don't know, Alan & Overy is sort of a big global law firm. There are probably about 10 other law firms that are in our sort of area. And generally speaking, what those law firms do is hub heavily in financial centres. And that's generally what most of the big US and UK law firms do. They're hubbed in Singapore or Hong Kong, or sometimes both. Our strategy on ASEAN has been a bit different. So instead of aiming to build up, although we have a strong Singapore office, instead of trying to build up a massive resource purely in one location, we decided about 6 years ago, because of what we saw in terms of ASEAN opportunity, to sort of spread our resource more through the region. And so we opened in Jakarta around 4 or 5 years ago. We opened in Vietnam, which was quite sort of counterintuitive at the time, around 3 years ago. We opened in Yangon a couple of years ago. And in both of those centres, our strategy is to sort of recruit the best local lawyers we can find, but also to bring in sort of international transactional expertise, so that we have people on the ground who can actually transact deals for our clients as they're sort of entering those markets. And that also gives us the ability to sort of pass on cost reductions from having lower overheads to clients. And this is quite a different strategy to the rest of our competitors, and something that required quite a lot of discussion and debate with central management about, because the sort of knee-jerk is that you need to centralise and hub resource. But our aim is to, if you like, to have a sort of virtual firm where we're basically joining up the resource we have in these separate ASEAN offices. So we have one team of people that we can deploy around the region, depending on the particular deal or particular project that's being done. Sort of why are we doing that? What sort of factors are driving our strategy into ASEAN? The first is, the obvious point that Japan is still the biggest investor into the ASEAN region by far. And so connectivity between our ASEAN offices and Tokyo is very important to us. And in some cases, we've actually relocated lawyers and contacts from Tokyo down to individual offices like Vietnam because of that strong connectivity and because of the deal flow. But we are seeing increasing competition from China and Korea particularly, in countries like Indonesia and in Myanmar and in countries like Laos. We're obviously a service company. We follow our clients. We try to position ourselves in a way that means we can best service our clients. Sometimes we try and plan ahead around that, as we've done here. And our sort of take is that, our clients generally are starting to think more in ASEAN terms, because they perceive that the customer base is becoming more homogenous. So in some ways, the kind of downward political, economic changes, although positive, are less relevant than, the simple driver that the aspiring middle class in Thailand or Indonesia or Malaysia or the Philippines essentially want the same thing. They want, insurance, they want banking services, they want phones. And so we see our clients sort of organising in ASEAN terms, and we're trying to replicate how we see that organisation happening. Another big driver for us is the amount of infrastructure investment that is going to be required across ASEAN over the next 5 years. ADB has estimated that around $16 billion of infrastructure investment is required each year for 5 years, most of that going into power, transport, and ports and water services. And obviously the Asian Development Bank, JBIC, other ECAs, IFC, are very big players across this region, and they're people we're trying to stay close to. One thing we've also seen really over the last 5 years is the larger ASEAN corporates becoming much more serious about investing in other ASEAN markets. What was really a novelty about 5 years ago has become the norm now, partially because ASEAN companies are getting maxed out in their own countries. They need to seek growth out elsewhere. But also I think because they're becoming increasingly comfortable with the risk and seeing the investment opportunity more clearly than they were previously. We've also seen a number of European and international banks withdrawing really from the banking space, and we're seeing regional banks and purely Asian banks, new banks really expanding to fill that gap and provide finance. And I think on the banking side where we are now is we can see the banks that are coming back into the market, they're very committed. But there are obviously some banks that are have gone and left. But there are new banks like CIMB, for example, that have come up really over the last 5 years, that are becoming increasingly important clients to us, and to our customers. As well as being spread through the region, we're also focused in Singapore and Bangkok to some extent, because that's where regional project developers, infrastructure developers tend to be headquartered. But we need to be aware of where decisions are made, which is often in Tokyo or Hong Kong or even London. But obviously there are a lot of risks in the market. The region is big, but it's obviously not a homogeneous market, a long, long way from that. And the markets in which we're operating at the moment are very different. Some of them are very domestic inbound, like Indonesia and Myanmar. Others are more outbound, like Malaysia, to some degree Thailand. And some markets are very small or very niche, like Laos or Cambodia. And so we're trying to structure our setup and our investment to mirror how we see those individual markets and to mirror what we see as the need of our clients when they're entering those markets. Okay.
Oh. Is that?
Yeah.
Okay. Thank you very much, Stephen. And last but not least, Serge, I know you said it would be very short, but given the spread of your incredible group, maybe you could just bring some insight into the workings of FMI, SPA, Yoma.
Thank you, Gwen. I really mean it when I said it's going to be very short, because I wouldn't like to use this forum as an advertising podium. I would need more than a few minutes if I had to do that. So I'll just say that we as a group were involved in basically 9 major sectors, which is financial sector, aviation, automobiles, agriculture. We're involved in the QSR services. We're also involved in various other types of basic social needs such as healthcare and education. So these are the things we're involved in. And if you would like to know more about us, well, the address is www.sba.com.
Thank you.
.mm or yomastrategic.com, and you'll find all the information there. I thought it would be probably more appropriate for me to make a few comments on AEC for the sake of this forum. And I'd like to say that as far as the business community is concerned, we view AEC as something that is compulsory, that we have to do it. And the opposite would not be an option. In today's globalization, and where the world is more or less grouped into various groups of interest, the Southeast Asian nations, I don't think, can survive economically if we don't group ourselves together. We would be far too weak to compete. So the establishment of the AEC is actually not something that has been dreamt up by some visionary leaders, but it's very much a necessity. So that's the first point I'd like to make. However, what Dr. Surin was saying this morning, I sort of catch a point where he felt that the business community in ASEAN has actually not readily signed up. And he was calling for the business community to actually be more active and to get on the bandwagon and make it happen. Well, I have a slightly different view, because I think the business community or businesses really do not need much cajoling. You don't need to give them rhetorics or nice sounding talks. Businesses will discern the first opportunity there is and will run to capitalize it. The trouble is that AEC up to today, or until very recently, has not enabled for businesses to see any concrete advantage or opportunities. And therefore, businesses kept aloof and weren't very much vocal about participating. And I have said this many times in the past 24 months, that businesses cannot lead the realization of AEC. Governments have to lead. It is beyond the ability of any business, no matter how big they are, how global they are, how regional they are, to actually make any dent or effect on AEC. Only governments, and 10 governments collectively, with the leadership of a few, could make it happen. And you can be assured that businesses will be firmly behind it if the decisions and the strategies are good and practical. So that's the point I want to make. But I'm very much encouraged today by all the talks that I've heard from many experts, and I'm very fortunate to be at this forum, as well as to be invited to speak alongside such huge giants such as Toyota and Citibank and Citigroup. I'm more encouraged because, based on what Professor Root has put up, I think Myanmar seems to have the best potential. I come from Myanmar. I'm very happy. Any of you want to do business in Myanmar, please come. My cards are out there. And I'd like to represent all the businesses in Myanmar. We have so much potential. We want to be part of AEC, and we're ready to work with anybody within the other ASEAN community to capitalize on the things that Myanmar can offer. Thank you.
Thanks very much, Serge. Actually, I think you raised a very interesting, relevant point that I was going to ask about further down the track, but I might continue on that train of thought, which is you raised this issue of whether it's more up to governments or business. And that leads to this point that we, as you said, Dr. Ruth, Surin, various we've heard today about these issues that need to come into place to enable AEC to take off as envisioned. And one of those key things is this issue of non-tariff barriers. So, you know, we've had recent landmark agreements by ASEAN economic ministers to tackle non-tariff barriers to trade, such as customs procedures and the like, which can only be done by governments. But you know, I'd like to know from our panellists how much of an issue are these non-formal barriers, not just to physical trade across a border, but, you know, also in services and banking, you know, law, finance, or your industries, manufacturing, for big companies with regional operations such as yours. So what are the most important you know, what would you call it, non-formal barriers? And can business do anything more than governments to, you know, clear some of those hurdles? Maybe I'll start. You're looking at me, Darren. Maybe you could give us an opinion on that.
Sure. Actually, let me comment one thing from what Serge said. By 2025, it's estimated that 50% of the world's consumer class will be within a 5-hour flight from Myanmar. So take the opportunity. He could be very critical by 2025 in terms of accessing that consumer class, half the world's population. Quite a thought. Non-tariff barriers. Yes, I mean, if I talk about the multinational companies within ASEAN, the non-tariff barriers become much more of a hindrance than the more traditional tariff barriers, which have almost been eliminated. The non-tariff barriers include many different things. If I think about the banking sector, there are all sorts of restrictions for foreign players. Everything from number of branches you can have, number of ATMs you can have, certain rules in terms of where you can invest the deposits that have been received in Thailand, for example. Even such things as the local banking communities, for example, will not allow foreign banks to join things like the iBanking pool, which means that people can't send online payments instantaneously, but instead they have to wait a couple of days for their funds to arrive. These are all things that impede the services that can be provided by foreign players. On a broader note, things such as some of the issues around customs, such as some of the things around intellectual property rights, these types of things cause various problems for multinational companies looking to expand within ASEAN, but also increasingly as ASEAN companies look outwards and expand beyond their national borders into other ASEAN countries, some of these things will also be a hindrance for themselves. On the banking sector, what has been achieved, there are a number of things which are positive. And so we've seen the ASEAN Bond Market Initiative, which has been terrific in terms of the debt capital markets here across ASEAN, which have grown fivefold from about $200 billion to $1 trillion from 2000 to 2014. We see developments in the stock exchanges and coordination, greater coordination across the various stock exchanges across ASEAN, which have also seen fivefold increases in market capitalization, going from $500 billion to around $2.5 trillion in market cap, which is around 100% of the GDP of the entire ASEAN region. The recent agreements between Singapore, Thailand and Malaysia means that investment mutual fund products which can be designed in Thailand can be sold now seamlessly to clients in Malaysia and in Singapore, and these are all good developments which bring down some of the barriers to doing business across borders. And the recent adoption of the banking integration framework for ASEAN banks, at least, will mean that any ASEAN domiciled bank will in effect become a qualified ASEAN bank and be able to operate in any ASEAN market as a local bank. That's terrific. What we would also hope to see, however, if we look more broadly at how much is contributed by the multinational banks and the global banks, is that some of these relaxations and liberalizations that are occurring, they also allow for foreign banks and global banks to participate, particularly those that have a long presence and a deep embedded history in the ASEAN region. But non-tariff barriers are a problem. They are a problem. They get in the way of doing business. They raise the cost of doing business, and they make it more complicated doing business across borders and across ASEAN.
Right. So taking off your banker's hat and putting on the AmCham hat, could you say, speaking generally for companies, and we're talking about, I suppose, foreign and particularly American companies, how much of an issue is it within, say, a chamber like that? But also, do you think that companies themselves can do more, or is it more like Serge's view that it's up to governments? I mean, there's many types of non-tariff barriers, as you say, but...
Well, let's also say something here. ASEAN's and AEC is not something that's going to happen on the 31st of December.
Right.
Dr. Surin said that this morning. Many people have said that this morning. And I think ASEAN's been a concept and it's been around for 50 years.
Right.
And businesses have been expanding. Look at Toyota. We've just heard from Tanada-san just how extensive and how deep the expansion of Toyota has been across ASEAN since the 1960s, and probably earlier. To that extent, businesses understand the regulatory restrictions and also things such as non-tariff barriers, and we have to find ways to work with them. And many companies have been successful, both global multinationals as well as the larger local companies within ASEAN, as they've expanded outwards through and into ASEAN and beyond. They've been able to work through with some of these barriers and expand their businesses and develop very profitable and growing business operations in ASEAN, which is important. In terms of AEC and delivering on the vision of AEC, I have a slightly different view to Dr. Surin, and I don't believe that private companies are lagging in this regard. In fact, I think companies have been well ahead of the game in driving their business models to be more multinational. We would like to see, and certainly our members from AmCham and the US business community would certainly like to see governments doing more to eliminate some of the existing barriers across the different markets. But also, I think some of the things that really get in the way of doing business overall. So if you look across ASEAN, with the exception of Singapore, many of the countries here still score relatively badly on a number of different indices which are measured around the world, be it transparency, corruption indices, ease of doing business, these types of things. ASEAN countries still have quite a lot to do. Now, businesses can work and find ways to do business. It increases our costs, but we can still find ways to be successful. But trying to improve on some of these things also requires government to act, and it seems a little bit harder when you've got 10 different governments with slightly different agendas, and certainly a more domestic mandate than a pan-ASEAN mandate, for them to necessarily find easy ways to tackle some of these challenges.
Well, thank you. And I'll come back to you, Stephen, perhaps on this question. But first, I would like to ask Tanada-san, speaking of these impediments and the role of government, as well as how proactive should industry be. Tanada-san, maybe you could tell us, do you think that a single auto market in ASEAN is a reality? I mean, this is the sort of thing that has been talked about. Is it doable? Is it a goal? How do you think?
Yes. If so, according to like regulations started from the end of this year with non-tariff, so officially we can say it will be easy to be one unity of like 10 countries of Asian countries. But on the other hand, as you know well, in terms of GDP per capita in ASEAN, so like Singapore, around 55,000 US dollar, and Indonesia, Malaysia also more than 10,000, and Thailand maybe around 6,000 to 7,000 US dollar. But on the other hand, so Cambodia, Laos, and Myanmar, maybe around 1,000 US dollar or something. So the situation of so income or per capita, so GDP is different from each other. So in that sense, through history of especially automotive industry, Thailand and Indonesia would be like a front runner. And if we clearly start from so like a non-tariff, there's no barrier. So as I said in my presentation, in case of like Vietnam, we have a factory in Vietnam. But after 0% of like import duty, we can easily send our car from Thailand and Indonesia to Vietnam. And finally, we don't have so keep like a factory in Vietnam. Now, on the other hand, when we think of the population of each country, like Vietnam, 90 million, Philippines, 100 million, and if we think of the development of automotive industry, so we have to keep like a factory and have to educate the industry of automobile, including future of Myanmar, which is population also 65 million or something. So, what is the meaning of single unity? It's not invader from Thailand or Indonesia to other Asian countries in terms of the automotive industry. So the point is how we can contribute to each country's economics and how we automotive industry can stimulate each countries, which is called we have to establish something like a win-win system. Otherwise, we cannot say it's like a single unity of market. So in that sense, suppose we have assembly plant in Thailand, Indonesia, and also in Philippines and Vietnam and Malaysia. How we can maintain that plant, and if possible, would like to establish an assembly plant in the other countries, or at least we have to consider establishment of what we call supply chain of parts. So companies who are neighbor countries of Thailand. Like win-win, like a system should be established. And then finally we can say it will have a time to be like a unity of single market. This is my way of consideration. And fortunately or unfortunately from tomorrow, I will be CEO of this region as representative of Toyota headquarters. So I have to consider not only Thailand, but have to consider all 10 Asian countries.
Right.
Thank you.
And even Middle East, right?
Thank you.
Okay, so perhaps, Stephen, you might have a view on this issue that Darren focused on just before, but also further to this question of whether companies can be more proactive to eliminate some of these barriers. Speaking as an experienced lawyer who's seen umpteen deals and worked on a lot of deals in the region, which runs you up against regulations and various regulations across countries, what's your view of the improvements, if any, the AEC will bring for, the kind of regulatory environment for corporate activity, and in particular things like M&A and joint ventures? Who would stand to benefit most from AEC and the kind of reforms it promises to bring? And would you expect to see more or less M&A and joint venture kind of activity? Sorry, that was a multi-layered
That was a long question, yeah.
Sorry.
I think on the first element, the AEC has certain aims, and if it's sort of moving towards if it can achieve some of those, particularly, reducing non-tariff barriers, reducing customs duties, and I think that's very positive. I don't personally see that there's going to be a level field in terms of general regulation in the 10 different ASEAN countries for a very long time. Most of them have very different legal systems, and many of them have, there are sort of different levels of development in terms of their, regulatory framework. If you look at, for example, the banking side, you have very well-developed sort of regulatory frameworks in places like Singapore, more rudimentary in developing places like Myanmar. The two countries are just extremely different. And I don't think, for example, on that level, that the focus of the ASEAN finance ministers is, for example, to try and, harmonize regulation so much in the banking sector. I think they're probably more focused on managing systemic risk and, controlling their own economies and making sure they kind of work individually still. So I think that's something that will happen over time. I think that there are some forces that are, for example, on the banking side, helping that to happen, for example, through Basel III, which is imposing similar kind of capital requirements on banks in different countries. And that's helping to sort of almost as a byproduct harmonise, some of the banking regulations around the region. But I think generally for corporates that are doing business in different countries, for a while it's going to be a case of actually doing the due diligence and understanding, the nuances and the regulatory framework of the country that people are moving into. Having said that, we have seen but we have seen a lot more interest in inter-ASEAN investment really over the last 5 years.
This is from clients outside, non-ASEAN clients, or
both really. I mean, I'd say that there's always been a very strong Japanese, element, both from utilities and on the banking side in investing in Indonesia, the Philippines. That's been quite common, and there have been a lot of big European, developers who are also doing that. EDF have been here for a long time, GDF Suez, and they have been very active. So I think, that's happening. I wouldn't say we're necessarily seeing an increase, particularly in that level of activity. What we're seeing more of is the larger Thai corporates, just moving, much, I would say aggressively, but more steadily into other ASEAN countries.
well, as a result of AEC?
Partially, I think, yeah. I don't think it's necessarily a result of things like the tariffs being reduced, although that helps. I think it's more a sort of a comfort factor that's developed over time as a result of ASEAN as a concept becoming slightly more concrete, and a sort of a comfort factor that if they do invest in another country, that the fact that there is an intergovernmental organisation gives them some level of protection. One of the positives on that is the ASEAN Comprehensive Investment Treaty that was entered into a few years ago. And I think that really does give people a lot of comfort, because it effectively, almost guarantees your investment in another ASEAN country against expropriation. And that's one of the reasons why we're seeing a number of investors into Myanmar, for example, warehouse their investments through Singaporean holding companies, because of the benefits of the ASEAN Comprehensive Investment Treaty.
Oh, that's very interesting. Thank you. In fact, speaking of Myanmar, I'd like to turn to Serge. As one of the most, or possibly the most international of Myanmar companies, and particularly in your banking operation, one of the most international of the domestic banking operations in Myanmar, that's Yoma Bank. You sit astride both foreign and domestic, really, interests and sensibilities. And even so, I think the recent entry of foreign banks into Myanmar, the government's decision to allow in 9 foreign banks on a limited basis, but clearly just as a beginning, thin end of the wedge, as some have said, has led some of your colleagues to rush to raise concerns about, competition, and warning that a country like Myanmar and a sector like the banking industry in Myanmar is not yet ready for the big boys or competition. So perhaps, using that as an illustration, could you tell us how do you balance the need in a country like Myanmar to actually allow your industry onto its feet before you court that rush of foreign investment, but keep foreign investors happy? I mean, how does that fit also with that push to be, expand your regional operations and push AEC along, etc.?
Okay, thank you. First of all, I think it is reasonable to expect that in any country, as you open up, there's bound to be resistance from many quarters, particularly from quarters which are not that familiar with other people. And that, I think, is historical. Everybody will be a little protective. So when you say my colleagues in the banking industry, those who have been quite protective and quite against opening up, they do exist, but I wouldn't worry too much because I think the objections are more through the lack of information or ignorance of this competition. When the foreign banks applied to come into Myanmar, and during the rounds of consultation, I think the most important aspect that we pressed on the government, the Central Bank of Myanmar, was to procure or secure that the local banks would not be marginalized. I think the word is marginalized, and everything could be focused on that word. It is not about prohibiting people to come in, but it's about not marginalizing or not eliminating existing banks. This is, I think, the same thing that we talk about AEC. And every time we talk about AEC, the subject of who is going to benefit most always comes quite high in the discussion. As if the AEC is supposed to benefit everybody the same. We know that cannot be true. There is no way 10 countries will benefit exactly the same. And therefore, there is bound to be countries that will get more, others that would get less. There would be certain sectors where some would get more and the others would get less. It comes back to the same word. As long as AEC does not marginalize any member country, it's good. And it's not about who gets more, because that is going to be a fact. Okay? So to answer your question, Gwen, I think the foreign banks coming into Myanmar has been welcomed as a very positive step in our liberalization of the financial sector. It is something which our government was very, very adamant on doing, despite strong winds against it. So personally, I'm very happy that it happened. The extent of liberalization or the extent of activities allowed to foreign banks is another matter. But personally, I think what has been allowed today, maybe my colleague at Citibank may not agree to this, but what is allowed today to foreign banks, I think, is the right measure for the first wave, for the first opening up. You do not want a backtracking because you have been too liberalized. And I remember one discussion we had, which was very serious, and we keep on pressing the central bank to say that you can always give more, but never think of taking back what you have given. So if you give too much now and you marginalize the others and there's too much backlash and you want to take back, that would be extremely negative. So give less and give more frequently, and you can open up more. So that's the steps that we adopted, which I think it's a prudent step towards liberalization. I hope I answered your question.
You did indeed. That it was spot on, actually. So maybe some of our other panelists might have a view on that, and perhaps if you do, Darren, you can add it to a question. Well, maybe you'd like to answer that.
Well, in the context of Myanmar, which is at a very different stage of development from the other countries in ASEAN, certainly I think the domestic banking sector requires a little bit more protection than I would expect to see in some of the other markets. Whether or not the banking licenses and the regulations for foreign banks make full sense at this stage, I guess, is open to question. Citibank's perspective at this point was that it really didn't make sense for us to try and apply for a license in Myanmar, because if we were to do so, Citibank as a brand would set expectations for clients which, under the regulations as established in Myanmar, would mean that we would not be able to meet those expectations. And we certainly don't want to set expectations that we can't meet for our clients.
Right.
Should banking in Myanmar be opened up a little bit more? I think so, because at the end of the day, the foreign banks going into a market have a very different target market than domestic banks. Domestic banks, at the end of the day, are there to support the growth of the economy in a sustainable way. Domestic banks are there to provide banking services to the mass market and to try and promote financial inclusion within the country. Domestic banks are also there to support SME growth and development, as well as the development of larger companies and supporting government initiatives. Foreign banks are not there for that purpose. Foreign banks are there to support multinational companies looking to come in and invest in the country, and foreign banks are there for those who want to do consumer banking, retail banking, are generally there to support more globally minded consumers who would like information, access, services, not just in one country but in multiple countries. So it's a very different target market. So the competition element isn't so much there. And that you see in the other countries across ASEAN. You see that in Thailand, you see that in Indonesia, Philippines, etc., where the activities of the foreign banks are very different to the domestic banks. As you see through the banking integration framework, as you see through even in Thailand, the Financial Sector Master Plan Phase 3 as drafted by the Bank of Thailand at this stage, there is a desire to see ASEAN banks expanding across borders into other markets. Well, for them to be successful, it's important that they have free and fair and open competition in their own markets. Otherwise, in moving from a protected environment, in an environment where you have scale and you have dominance, to moving to a market where you are a new entrant, a minor player, still trying to establish what really your strategy is and why people should bank with you, when the playing field is loaded against you, becomes very difficult. So for really expansion of ASEAN banks across ASEAN, we need to see a more level playing field across all of the markets, not just within individual markets.
Right. So that point, I think, leads to another question I have, which is open to all of you, ranging from Tanada-san and Stephen to all of you, if you have a thought on this, which is speaking about foreign companies, and that includes Asian non-ASEAN companies. Do you think there would be a strong advantage for non-ASEAN companies that in future, after this year, want to interact with this region, to have headquarters within this region, as opposed to companies that up to now have not put down roots in the region but are, vitally interested and involved? I mean, what do you think, Stephen?
I think that's a trend that we're already seeing. I think there are a number of...
a trend to open regional headquarters?
Opening regional hubs either in Singapore or some cases Bangkok.
Right.
And I think that's something we would see continuing for a number of reasons. I mean, I think, as I said before, I think companies are starting to see ASEAN, as a block, and the customer base there is becoming more homogeneous, more similar. And so it makes sense for the kind of group ASEAN together, which I think increasingly a large number of companies are doing. It's interesting in Bangkok, if you just walk around and meet people, how many business cards have changed from country head to head of ASEAN or head of Indochina, or so it's quite common. And And I think that is a trend that will continue. It makes sense to be in the region. It makes sense to have physical, coverage to some degree of the region. I think, somewhat cynically, I think ASEAN as a concept as well is a lot easier to sell to head office. It sounds quite exciting and interesting. And if you're trying to recruit very good people, it's much easier to bring them into, something like a role of head of ASEAN, and to give them a regional role than it is to simply put them in Singapore, and tell them that's where their job is. So, so it serves a number of functions. But yes, I think it is a trend that will continue.
Right, and you think it actually does benefit a non-ASEAN company in the future too? I mean, in terms of actual, position in the regulatory environment as well?
I think so, yeah, because, the reality is the region is not homogenous, and regulation and the legal framework in different countries is very different. Right. And it's quite hard to sort of monitor that from a distance. You need to be sort of on the ground and have the ability to go to those countries, to meet people, to help build businesses, and to really understand what's actually happening on the ground in terms of the regulatory framework and what's involved.
Okay, so before I turn to a different topic and then take some questions, would any other panelists like to comment on that? Tanada-san, Serge, if you have anything, no? No?
So, for a Japanese enterprise, so long history with this area. So in that sense, always we are interested in invest here, not only Thailand but neighborhood countries or ASEAN countries. So as I said, so this area's population would be 600 million, and in terms of also automotive industry, not yet matured. So there is so big potentiality for expansion of the automobile industry. So in that sense, we Japanese enterprise always interested in investment here to compete with China, anyhow, right? And Korea, of course. And nowadays, so through more than 120 years history between Thailand and Japan, we have lots of enterprise establishment in here, Thailand. So I suppose in near future, through this Thailand as a center hub, maybe with Japanese enterprise, with Thai enterprise, we'll have a chance to invest for another Asian countries. Right. This kind of new scheme will be start through AEC.
So you're saying it's the right time, partly because of AEC and the development of ASEAN.
And including also SEM company, SME company.
Right. Okay, that's very interesting. Thank you. So I have one more question, and then I'll turn it over to the floor, and that is about an issue we haven't spoken much about in this forum, and that's about politics and its role in broader, in the broader economic and trade fields. But, for example, sitting as you do, Serge, in Myanmar, watching the reform process there, peace talks with ethnic armed groups, upcoming elections, political reforms, one can see how politics is intrinsically tied up with the economy and trade, and to a lesser extent in other parts of the region as well. And maybe some of you have thoughts on Thailand, where politics is looming very large in economics. So how do you see the role of politics in your country at the moment, and the process of reform in the push to boost the economy and actually, be a full member of ASEAN and AEC and take advantage of all this? How important is the political question?
Well, I have never seen a country where you could separate politics from economics, and they go hand in hand. If you look at Myanmar, it is very clear that whatever we have achieved in the last 4 years was the result of the political reform that happened in 2010. The absence of that reform would have rendered any kind of economic activities to be useless. So, yes, there's a very, very close connection between politics and business, politics and economy. I don't have a crystal ball, Gwen, and I like to have a second job as a political analyst to just speculate what will happen, and nobody actually cares whether you said something right or wrong when the actual thing happens. But the fact that you can say something, people all like to listen. What will happen this year, I'd like to just say two things that I'm happy with. The first thing is something that happened a few days ago when the senior minister at the president's office made a public announcement that the government is going to ensure that the elections will not be delayed and it will happen during the first part of November. Now that's very good news, so we will not have to speculate on the fact that there's a possibility that the whole thing will be delayed. The second thing he announced was that it will be a clean and free election. In order to back this statement up, he also disclosed that the government of Myanmar has actually invited the Carter Foundation to come and be part of the observer team. Now this is all, to me, extremely, extremely good news, because at the end of the day, after 5 years of the first trial of democracy under a quasi-military civilian government, the test that we are going to see is whether or not the road towards democratization is going to continue. And this announcement actually gives us some hope that it will not only continue, it will actually be deeper. Now that leads us to another set of situation. When you have a clean and free election, the results are always unpredictable. That has happened in many, many countries in the world. In the past decades, where clean and free election was not necessarily the norm, it was actually abnormal to expect clean election. Results were always predictable. But the minute you make it clean and free, nobody knows what's going to happen. That is what we are facing, or will face at the end of this year. And I think it is quite difficult to predict who will actually win this election. Because if you are going to put a bet based on sentiments, I think the opposition has a very high chance of winning, because people basically want change. I mean, the need for change, although it's very good, may not bring the best results. We have seen that happen in many countries, and recently in places like Egypt and so forth. Okay? Change is what they want. Change is what brought disaster. So I'm not saying that's the best thing, but that gives the opposition a much higher chance of success if it is free and clean. So I've been looking forward to what happened, but I would like to say that the business community, however, feels that whoever wins this November, the economic policies of Myanmar is unlikely to change. It will still move forward, and it will move forward at a faster pace than we did in the last 4 years, including this year will be 5 years, which is the tenure of one administration. The next administration will probably move our economic policies, reform much faster, because the momentum is there already. And there is absolutely no possibility of a U-turn back to the old times, because whoever wins cannot afford to do that and would require economic success to sustain their political standing. So I am quite optimistic and quite, looking forward to the years ahead. People have asked me, what's your prediction? I've said that as far as our company is concerned, our strategy based on our own outlook is that we will have 6 more good years in Myanmar, which is 1 year remaining with this administration and 5 years for the next administration, whoever that administration might be. If we ever have problems, it will be at the end of the second administration, which is a time when any mistakes made over 2 administrations will start to emerge and has to be tackled. So 6 years of good growth, 6 years of expansion is what we're looking and basing our own corporate policies on. And I hope that will have some effect and influence some other people to join, because this is the right time. Okay?
Thanks very much for that. I think you're saying that the process is even more important than the result in terms of the image of full economic engagement for Myanmar in the region. Turning to another part of the ASEAN region, perhaps Darren, could you tell us, maybe wearing your other hat, your AmJam hat or whatever hat, is politics a concern for investors, big companies in this region, and when you're weighing up the benefits of AEC and inclusiveness and ASEAN expansion against concerns that are closer to home?
Well, I certainly agree with Serge that politics and economics are inextricably linked, very closely linked. That's for sure. When you look across ASEAN, look at Singapore, they've managed the political side very well, and the economy has grown very well. If you look at the Philippines more recently, the Philippine economy has been really doing very, very well, and President Aquino has done a pretty good job. When you look at Indonesia, obviously there's a lot of hope around Jokowi, but at the moment he's trying to get his arms around what is a kind of a difficult political situation, and whether or not he'll be successful will no doubt influence the economic outcomes that we'll see in Indonesia going forward. The question, I guess, which is relevant for us in Thailand, and is certainly something that is interesting when you look across ASEAN, is how much free and fair elections and democracy, how much of that, what sort of role has that got to play? You can certainly argue that Lee Kuan Yew, when he set up this structure in Singapore, it was not necessarily under a full democratic regime, and they were very successful. When you move from a very dictatorial regime to a more democratic regime, as we've seen in Indonesia, it was certainly traumatic to make that transition. And throughout all of these different markets, I think over the last 50 years or so, certainly we have seen difficult political environments. Has that stopped investment? Well, if I wear the AmCham hat and look at US investment in ASEAN, the stock of US investment is $204 billion. That's around the same amount as the total US investment in Japan, South Korea and China combined. It's a pretty significant investment number from US companies. And the US, obviously, as you know, and as we've heard here in Thailand, prizes and thinks that democracy and clear democracy is the way to go. Yet, it hasn't deterred US investment in this region, and it certainly hasn't deterred the US's engagement with the region or the desire to strengthen the relationships across all of the markets in ASEAN. Right. So, yes, politics drives economics, drives business performance at the end of the day, but we're used to difficult political situations in ASEAN. As it comes to Thailand, we would certainly like to see a peaceful outcome, a resolution, and a return to some form of normalized democratic government. But what exactly shape that takes is something for the Thai people to work through.
Right, and it certainly doesn't seem to be deterring Western investment. So thanks for that point. And I think now we've got probably about 10 minutes given. if there are people in the audience with questions, please ask them. We've got an incredible spread in our panel here of across a range of sectors and countries. So I'll open it to the floor.
Look, I want to pick up, we have a little bit of a crystal ball that Darren alluded to. In 10 years' time,
I think that was Serge who alluded to the crystal ball.
I think Darren mentioned about in 10 years' time, 2025, more than 50% of the world consumer market is going to be located within a 5-hour flight of Myanmar. Now, Thailand is lucky. Thailand is very close to Myanmar. So you can imagine China, all of China, pretty much, I think, reachable 5 hours from the north, the Kachin state, for example, let's say. India, all of the subcontinent, all of ASEAN. By that time, ASEAN will be about almost 900 million. 10 years' time, let's say 3% growth a year. And then you have growth, population growth in South Asia and so on. So this is a crystal ball. I mean, this is a blurry crystal ball. It means different things, but the potential is immense. I think we're at the right place. I want to bring in the geography of the AEC, the geography of growth in Asia, the Asian landmass, and the East Asian landmass in particular. I have a couple of questions for the panelists, Mr. Tanada and all of you, in fact, Citibank, Darren Buckley, Yoma, Mr. Serge and of course the law firm. Are you experiencing more growth in the mainland? Alan Ogilvy, are you experiencing the growth more on the mainland? Toyota, I saw the figures, very impressive. But is it more sort of the Thailand, and you're looking at the Mekong? I saw the Mekong mentioned. So is that what you're banking on? I wonder if we are going to see in 10 years' time a growing divergence, not separation, but divergence between the mainland markets, the mainland economies, and the maritime economies. Not a separation, but going in their own direction and trajectories. So that's first question from this geographical reference. And then second, you mentioned that now you're talking about ASEAN departments, and this is a new trend. A lot of the companies that I noticed, I think the ASEAN markets are coming into their own. So they have ASEAN departments in the various firms. So ASEAN is becoming an identity among the firms, even more than academia. We have ASEAN, but even more than some other circles, NGOs, civil society, international organizations, and so on. So those are two questions from this very, I think, revealing, instructive trend going forward. It may not be good. We could have a huge market, but we could squander it by having a war, by having conflict, by having water conflict along the Mekong River, by having conflict between China and ASEAN members in the South China Sea, by having conflicts within these countries. In Myanmar, they could unravel and perhaps even disintegrate and derail what a process and growth that we are seeing. And in Thailand, very polarized, very existential. So a lot of huge potential, but a lot of caveats. On these two questions, is mainland maritime diverging a little bit? Are you seeing distinctive markets emerging? Second, and ASEAN taking on an identity, becoming a distinctive entity within the operational frameworks of these firms that you represent. Thank you.
Let me answer the second part first. Yes, I think is the answer. Certainly from the mindset of multinational companies, we are certainly looking at ASEAN more than we're looking at individual markets within ASEAN. And we're also looking particularly at the probably the three overriding trends of our generation, which is globalization, urbanization, and digitization, and how ASEAN is fitting into that. If you look at ASEAN, 36% of the population today lives in cities. That's pretty low. When you compare that to the United States, it's around 77%. Europe is around 63%. Even in Latin America, I think it's around 55%. So we expect to see much more migration from the agricultural sector into larger cities that will develop across ASEAN. And we would expect to see, and we're already seeing, I think, 110% penetration in mobile phones across ASEAN. We'll expect to see greater use of digitization, etc. Now, these things, the movement of people into clusters of cities, the 36% in ASEAN today that are in cities generates, by the way, around 50% of ASEAN GDP. The digitization is going to be a huge enabler, and so we would see generally across ASEAN and through the AEC over time continued focus within these countries of a blurring of national borders and more harmonization. And as multinational companies looking inwards and how we do business across this market, certainly I think we're looking at it more as an ASEAN region than we are as individual unique markets. On the second, or the first question, is there some divergence? Today, maybe, but it tends to be in I think, if I talk to our clients, it tends to be more not necessarily driven by the fact they're maritime or they're mainland, but it's more in terms of the cycle of where each country is and the governance of and the political frameworks of where each country lie. And so Philippines, it's doing well. It's maritime. It's a little bit on the border of ASEAN. It's doing a little bit better than perhaps you would see Thailand doing at this point in time. But then the political situation is driving the economic situation, and that's part of the reason for the divergence. If we look at our business, and certainly when I think about our clients' business and some of the business of our AmCham members, the business results and the performance certainly is. I think we go a couple of years back, people were looking at Thailand and saying this is terrific, and the results are terrific. One of the outperformers of ASEAN today, that's not necessarily the case. And so through these different cycles, I think you'll see ups and downs across the different ASEAN markets. But as we manage now portfolios of businesses across these countries and look to invest across ASEAN as opposed to investing in each of 10 countries in ASEAN, investments will ebb and flow to where we think the opportunities may most benefit the overriding global trends of urbanization, digitization, and globalization.
Thanks very much. Stephen, maybe you could speak either from your personal viewpoint or the kind of views you're getting from your clients who are scattered across the region about those key issues. Any sense of divergence between what they call mainland South Asia and maritime? To be honest, I tend to agree with Darren on that. I don't think the fact that a country is sort of maritime and not sort of connected by a land system is necessarily going to make much difference. I guess there's a bit of an increased cost there from shipping. But if you look at the Philippines, I suppose arguably you could say Indonesia is just one big island or a number of islands. You know, it doesn't really seem to make too much difference. But I think you know, where there is more of a risk actually is, you know, where there could be winners and losers, as Darren was saying, it's not necessarily because you're going to have poor countries that end up ending up on a sort of a slower track. There are obviously risks for countries like Thailand, which are emerging into being sort of middle-income countries. One statistic I heard recently was that 10 years ago, for example, there was about $35 billion worth of hard disk investment in Thailand from the electronics industry, and there was about $2 to $3 billion worth of investment in Vietnam. 10 years later, there's still 35 billion of US dollars of hard disk investment in Thailand, and there's 37 billion of hard disk investment in Vietnam. So, you know, so there's been this sort of big change there where Thailand has sort of stayed the same, but there's been a sort of move and a migration of that particular industry to Vietnam because of the lower labor costs, and because Vietnam has sort of opened up and tried to encourage that business to move. And the other thing that's interesting there, which slightly goes to the digitalization kind of mobile phone penetration point. I mean, ASEAN at the moment is the third, I think, biggest consumer of mobile phones. So there's a leapfrogging of fixed line technology. Is that in Vietnam, people are basically already moving to solid state drives. And so most of the hard disk investment there is going to solid state.
which is obviously the thing which will be the way for the next 5 years. Whereas in Thailand, there's no solid state hard disk investment. It's still the old system, and so you can see that actually the winners and losers there. It's going to be hard to sort of pin it down to simply poor and rich countries or maritime or landlocked. It is going to be do with the ebb and flow of investment from country to country based on a number of different factors.
Point the ASEAN taking on there.
Yeah, I think we sort of mentioned that before. We are certainly seeing companies focus on ASEAN more as a region for a number of different reasons. As an economic bloc, it is certainly very compelling. Presumably, you've already seen the statistics about what ASEAN looks like now as one country, what it would look like in 5 years as one country, and there is a compelling story there. And I think our clients and ourselves are trying to focus on ASEAN increasingly as a disparate region. And the region is helped by the fact that the region was sort of pushed together a little bit by the rise of India and China as economic forces. So there was a slightly defensive component to sort of ASEAN pushing ahead on economic integration. But at the same time, the region is benefiting a lot from the huge Japanese investment, but also from the increasing competition from China and Korea, which is sort of helping maintain that level of enthusiasm.
Right.
So that's good.
Well, thank you very much. And I think on that note, there's no burning question out there. Incredible. So I'd like to give a very big thanks to our panelists. I thought it was an excellent CEO view of the region, and I'd love to come back this time next year and ask you about your predictions, and particularly yours, Serge, so maybe we will lure you back next year. So thank you very much, Tanada-san. Congratulations on your promotion. And thank you, everybody, for participating in the forum.